Welcome to Share Talk, the only podcast where investors come first.
Today is March 24th, 2020, and the word unprecedented has become a cliche for every aspect of life in the UK as we knew it. Now, some companies are hunkering down and chosen the path of news blackout. Others see it as a golden opportunity to share the company narrative, and one such company is Blue Star Capital. And I'm hoping that its chief executive, Anthony, aka Tony Fabrizi, is anything but blue. Tony, first time on a Share Talk podcast, unusual times. So spread the cheer. What is it that your company does?
Well, hi Sarah, nice speaking to you. Blue Star is an investing company. We're listed on AIM. Ticker symbol is BLU. And we have a very wide investment remit within the sort of tech, payments, media, and gaming areas. Although our present portfolio is really focused on payments and eSports, but historically we have invested in other areas. So the key point I'd like to emphasize early on is that Blue Star is looking for investments that can achieve a significant return. So we're not looking for sort of 20-30% per annum growth. We're looking at companies that can achieve 500% plus growth over our period of holding them. So we're looking for very high returns, and obviously that does bring with it, it's quite an aggressive approach. So we take large stakes in businesses and we focus at a very early stage of investment. And if you wanted to characterize what we're looking for in our investee companies, I would highlight four key features. The first is we're looking for companies that are involved in large and growing markets, simple businesses to understand with a compelling proposition. Because we invest early, we're looking for a very low entry valuation and also highly incentivized management teams, which normally means they have a significant stake in the business. So if you look, for example, at our largest investment, a company called Satoshibezos, a blockchain business, we believe it's got a very compelling proposition. We invested very early and the management owned 40%, so it ticks a lot of boxes for us.
My goodness, you're not wanting much, are you, Tony? I mean, that sounds like a complete idyllic set of incentives, 500% growth. So in terms of Satoshi Pay, the investment, has it paid off? How much more growth is there? Will it achieve that 500% growth?
Well, we hope so. It is our largest investment by far. We invested just over 2.5 years ago. It's carried in our books based on the last valuation of 4.75 million. We own 28% of Satoshibezos. As you can see, it's a large investment for us. And we invested 1.8 million. So we're up about 150% so far. We do expect to sort of achieve our target over time. So perhaps let me give you a bit of background on them. They are a blockchain business, as I mentioned, uses the Stellar currency, which is the 12th largest cryptocurrency out there. And we believe it's got a very strong management team, tech team, and it's developing platforms that could be used across a number of different industry verticals. So the first market they went into was micropayments, where they can transfer literally half a penny using on the internet, which is really not seen by anyone else. And the first use case there was publishing. It's a great application, but unfortunately the publishing industry is quite conservative, so it's been slower to take it up than we expected. But I do think it will come good in that sector. But more importantly, they recently moved into the B2B payment space. And I think this shows that they're reacting to what's happening in the world. And B2B payments is an absolutely enormous market. I think the fees last year were 170 billion euros in that sector. It's dominated by the banks and it's highly fragmented. Now, Satoshi Pay solution, I'm pleased to say, is cheaper, quicker, and more transparent by the banks. So they really have an interesting opportunity here to disrupt what's a very large market. In terms of where they are, it's beta testing at the moment, but they already have a number of customers lined up very keen to take on this service. So it is an enormous opportunity, and hopefully it will allow us to achieve our target.
Okay, so you used the word enormous there. Earlier on, you said massive, a massive market, annual transaction fees totaling more than 170 billion euros. Now, even a small percentage of that market could be a company-changing amount. What other companies has Blue invested in the payment sector, and are they just as sexy?
Well, we have one other investment in payments, a company called Starla, which in fact was the first investment that the company made when I was CEO back in 2015. This is a biometric payments business using finger vein technology. So if you look at the 4 criteria I mentioned at the beginning, obviously payments is an enormous market. I think it's very easy to understand that you pay using your finger to identify yourself. And we invested really first round at 3 million or very early on. And the CEO today owns over 30%. So it ticks a lot of boxes for us in terms of our criteria. The tech itself was actually developed by Hitachi and patented by them very extensively. And Starla has a license to use that technology. So we invested, as I mentioned, in the 3 million valuation. The company has raised around about 10 million since we first invested. Most recently on a 40 million valuation. So unfortunately, we haven't been able to follow our money. And in fact, it's not our policy anyway. Once a company gets about 20, 25 million to carry on investing. So we're down to 1% of that business now. But that does mean our investment has achieved over 600% return to date. And I think there's a long way to go. So, we think it's an exciting business. To date, it's trialled in a number of UK retailers and European retailers, but I think most importantly and interestingly, it's recently moved outside of Europe and is now working with the Egyptian authorities on a potential countrywide rollout of the tech. This is, you mentioned the word game changer. I think this certainly would be for Starla. If they secure this contract, which is quite close now, they become a very profitable and I think very valuable business immediately. And not only do they have that contract, but there are other contracts in the Middle East in particular that they're quite close to. So it is a game changer if they get this contract, and very exciting times for Starla. I suppose just finishing off, I think the only caveat on both our payments businesses is that they still need capital. They're not profitable at this stage. So everything's caveated on the fact that they can access capital, but they're both very exciting businesses, and I'm sure they get funded.
Okay, well done you. You managed to talk for about 5 or 6 minutes without mentioning the coronavirus, which is very refreshing. So that's the payment side of the business. I'm not so sure that I'll be wanting to put my finger anywhere over the next sort of 3 weeks. But on to eSports. Sorry, I'm being disrespectful. On to eSports. Exactly what is it? And, why has BLU got involved in it?
Well, our investment remit is much broader than just payments, and we've been looking for another area to get involved in. And we took that decision middle of last year to actually invest in another sector. So the esports sector, again, ticks a lot of our boxes. So it's a very large market, growing market. It's a very easy business to understand. And we found an opportunity to invest in 6 companies, actually, in an investment portfolio, and at attractive valuation. So we're first round again. And we believe that the management teams look good. So, again, we like this sector. The esports sector is growing very rapidly. There's various figures batted around, but $1 billion turnover last year, forecast to sort of almost double by 2022. And when we're talking about esports, we're covering really electronic sports competitions using video or electronic devices where you have professional players and it's watched either through digital media or at a physical venue. And there's been lots of press and TV coverage of teenagers earning over £1 million, dollars, whatever it is, from winning an esports tournament for a game such as Fortnite. And that obviously grabs a lot of media attention. But it's more than that. It's a lot more than that. So a good way of thinking about it is to think about this Premier League, for instance, when it started up in 1992. We believe esports is at a similar stage as the Premier League was back 30-odd years ago. And all the same revenue opportunities exist. So sponsorship, merchandising, broadcasting, successful fees winning tournaments, licensing, this is all available in the esports world. And we've invested in 6 esports businesses, giving us a global footprint. So UK, India, US and Canada, Singapore and Australia. And we invested a similar amount in each company, £150,000 approximately. And our shareholdings range from 11 to 18% of this maximum. We're very excited by this portfolio. The sort of 5 times return that I mentioned early on, I think is achievable over the entire portfolio. I mean, I'm sure one or two will be more successful than others, but that's the sort of area we're looking for. And perhaps if I can just touch on a couple of those companies, the Lords is a UK-based business focused on European esports, looking to become the most recognisable franchise later in this current year, which would be a major achievement if it can do that. And secondly, Dynasty, which is based in Singapore, and is already getting some government interest and support, as looking at monetising grassroots esports through the whole of Southeast Asia. And that will involve a sort of online portal and various league involvement. So our investment there is 14%. And I think you can see both of these are potentially big opportunities for Blue Star. And we're in very early, very low valuations. And, I think there'll be news in the next sort of 3 months or so.
Okay. So your shareholding in Dynasty just below 14%.
Yeah.
Your esports investments overall, will they require further funding?
Almost certainly. As I mentioned, we're very early stage in all of these investments, and they are going to require further funding, which obviously in today's environment is not always the easiest thing to achieve. But I think they're all exciting businesses, and we're hopeful that they'll all get supported.
Okay, now you keep saying we. Is that the royal we, or do you have others on your management team?
Well, thankfully, there are other people involved in the company other than just myself. So Derek Liu recently came on as chairman. Derek's a great guy. He's got a lot of experience in private equity, early stage investing, and he's really very keen on the esports sector, so he brings a lot of knowledge and contacts there. And Sean King, a non-exec, very experienced in media, blockchain, early stage investing generally. And, we're all shareholders in the company, I would mention. Derek recently invested £100,000 when he came on as chairman. I think between us, we own about 6% of the company. So, highly motivated to make this work, not only for all the shareholders, but for ourselves. So, I think we're all aligned.
Okay. We're all going to become entrepreneurs whilst we're locked in our homes for about 3 weeks or so. So other private investors, can't they just do what you do? Can't they access these investments on their own?
Not these particular investments, I don't believe. No, I'm sure they can invest in private companies. Obviously, there are lots out there. But Starla and Satoshibezos, we're the only fund invested in either of these companies. So if you're looking for sort of invest in this portfolio, that we are the only way in. Neither of them are sort of taking smaller investors now. They're talking to institutions. So I think it's almost impossible for a private investor to get access to these companies. On the esports side, but clearly if you're a high net worth, you might be able to participate in some of their private rounds. But I think we're probably the easiest and the best way into a lot of these companies.
Okay, what do you currently trade on, since we're touching on recent market turmoil?
Yes, unfortunately, we, like many companies, have been impacted by what's been going on in the markets, and our share price has come off recently. So we currently trade a discount of more than 50% to the NAV we stated back in September. And as I've hinted at, there's been quite a lot of progress since then in our two main investments. And we subsequently invested in 6 exciting esports businesses. So discount, you can make up your own mind what it might be today, but it certainly looks very appealing to me. And we are very confident the portfolio has significant potential. And let's hope over the next year we show that.
Okay, so just to recap, going right back to the beginning, in terms of your characteristics, large and growing markets, simple businesses to understand, compelling proposition, low entry valuations, highly incentivized management teams. I'm sure that list of characteristics will expand as the business grows, Anthony.
Yes, I'm sure, but those are the key things that we will keep focusing on in any new investments we make, and I think they've served us well so far. I think our IRR, since we became involved as a management team, is over 30%, which is reasonable, I think. So, yeah, I think we picked some key things. They're very simple things to understand, and I think that's the way we'll carry on.
Tony, thank you so much. Totally comprehensive, such a departure from what I've spent most of my time listening to, talking about. I look forward to our next conversation. Tony Fabrizi, Chief Executive of Blue Star Capital, thank you very much indeed for joining us today.
My pleasure, Sarah. Thank you very much.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.